I'm taking along here, this is pre-market, market's just opened, and my reasoning is because we have these lows, okay, basically a double bottom, equal lows, and this little fake trend line. And so my thinking is that I know the market needs to get back up here to rebalance and mitigate this fair value gap, and I know that there's a fake trend line here, right, and there's equal lows. So retail's going to see this as support, and the market's going to want to entice them to take long positions. Okay, we've also inverted this bearish fair value gap, right? And so I'm thinking the market needs to come up here. It also needs to encourage long traders into the market before coming back down and ruining this little fake trend and these equal lows. So I'm basically putting on a very small position for the market to meet that objective. And that's really the reason for the trade, nothing more than that. It's a low probability trade because the market can come down, take out this liquidity before coming back up to mitigate this. But ultimately, I know the market's at some point going to come up here. And so my trade is just on the fact that, hey, the market needs to come up here. We've got a fake trend line. We've got equal lows. The market should encourage long traders in the market, get people buying, and then come back down. So that's my reasoning for taking this position. Low probability, therefore low size. And it's obviously not the right time to be trading the markets. This is just the open, right? We could very easily come back down, sweep these lows, and then go back up. The market hasn't even set up yet. So this is just a scalp trade, basically playing the imbalances and trying to forecast what I think the algorithm is going to do, which is to entice the long traders into the market before going back down and sweeping these lows. Okay, so we'll see what the market does. Small size, only a one lot, and I'm going to go mute and let this thing play out. Okay, so let's just talk about a few things for those of you who are still with me while this is still doing its thing. So, number one, you want to make sure you're comfortable with the risk that you are putting on. You've got to be willing to lose it because this is a low probability setup, although it does repeat very often. Okay. And you got to make sure that you're delivering, right? This price is delivering from a bullish signature. So here you can see we're coming up from bullish fair value gaps, right? So the order flow on this lower time frame is bullish. And you also must have a dump, right, on the left-hand side that you are coming up into if you're looking for a long, and obviously the opposite if you are looking for the market to be going down to fill in a bullish fair value gap. Okay, so you have to have a dump on the left for a long setup. You're only looking for the highest fair value gap or the lowest fair value gap, right? So if I'm looking to take a long, I'm going to be targeting the highest bearish fair value gap. If I'm looking to take the short, because we've had a pump up and now we're coming right down, like down here, then I'm only going to be interested in the lowest fair value gap, right? So here we've had a pump and we've come down to the lowest. Okay, now we've had a dump and we're going up into the highest. Okay, and on the high time frame, right, if we're taking a long, while this is a low probability setup because it's out of session, right? Um, the idea of this direction is high probability because we have highs above the market. And this fair value gap is just a stepping stone within that movement. Like I'm expecting higher prices because we have a previous daily high. Okay. So for example, if we look at a hourly time frame, then we can see we've got highs up here, right? These are all relative equal highs that we will most likely go above on this day. So me grabbing that 1 minute fair value gap, while the setup is low probability, the idea that we are going to go up is high. It's high probability. And you can also see that on the 15-minute, right? So on this 15-minute time frame, we have relative equal highs. And so me coming up, right, into that 1 minute bullish fair value gap, so if we go back down to the 1 minute now, is a good idea, but the setup is not high probability. Okay. Now I don't muck around with trading the stops. You can see we're building sell side liquidity here. The market can easily come back down and go back up. Okay. All I do is when I get close to my target, I just set my stops to break even, and that's it. I'm happy with that. You could also target just the midpoint of the gap. If we were targeting just the midpoint, we'd be out of this trade. But I have found that these gaps typically get filled and we typically go higher. Even if we were going to fill that, we'd go up a little bit before coming down. And as I said, there is higher liquidity pools above that target, right? So they're just a few things to keep aware of for the overall setup. And as I said, while this is a low probability setup, it's something that repeats all the time. So if I go and look at and show you yesterday, same thing, right? Had a bigger move yesterday from the open. So yesterday's move up was, okay, this is all New York. Let's try and locate it. It was here. Okay, so where's the open? There we go. So there's the open, right? We had a bit of a consolidation, moved up, much bigger move up. Okay, and the reason is because just like today, prior to the Asia session, we had a dump from the open we're coming back up into that last fair value gap that was left unmitigated, right? So while it's a low probability setup, it happens more often than not. Okay. Now the other thing I'll say is that the movement should be, so we've opened here yesterday, and it's a continuation of a move that's already in play from the previous day. For example, the closing of that day, we were already moving up. And so today is the same, right? We, from the previous session, right, we're already moving up, opens here. Okay, so we're already in progress of a move up. Okay, so you can see we're having this little pullback. And that's because the other thing that I would like to see is that we get here, prior to the opening of Asia, which is 7 p.m. Because otherwise at 7 p.m., new hour opens, you're going to have that liquidity run, and we might get back down here now before we get back up, which is why as soon as we're close to that, because all that's really doing is engineering more liquidity. Now we're basically getting short sellers in the market from this bearish fair value gap. Okay, and so you don't want to have trail stops because depending on the time, the market, if it's a new hour, will come down and sweep liquidity before going back up. And that's also why if you want to be a bit more aggressive in taking your profits, you can set your level at the midpoint, at which point we would have been out of this position. So I've got myself to break even. We'll just monitor this and see how this pans out. But Asia is about to open in a few minutes, so let's see. All right, folks. So that's a little unfortunate. We got the closure of the fair value gap, but we did not get the fill. And so on my futures account, I've already hit the break even stop level, and looks like here on CFDs, we will also hit the stop level that I've set. But go back and do your own backtesting on the strategy. I hope you've enjoyed the video with this live trade case study, and I look forward to talking with you in the next lesson.